Hi folks, this is Mark Emery with the Lighthouse Law Club once again. This presentation is a follow-up to our last video, which was Beat the Bankers. In that presentation, hopefully you've seen it. If not, you need to. That establishes a significant basis for understanding of what we're talking about here today. But in that presentation, we made it very clear who actually funds the mortgage. And of course, you know that's you as the creditor when you create the note. All right, so this is part 2 to beat the bankers. And we're going to talk about recouping that note, or at least the value that emanates from it. Okay, right up front in this program that we have in the Law Club, our objective in the Recoup the Note program is for you to receive a check in the mail for the proceeds of your promissory note. Simple. That's it. Get your money. Make a claim on those assets. You understand that we operate, the whole world operates, a double entry bookkeeping system. That double entry bookkeeping system requires that for every entry there is a debit and a credit of equal value. So that would also say that any transaction there would be required to have a debtor and a creditor to balance it out. For every asset on the books, there is an equal liability. Okay? So that's our double entry bookkeeping system. All right, now the mortgagee typically takes a position as the creditor by issuing you a check. Of course, they never told you that you were the one that funded that check by issuing the credit via the note in the first place, right? All right, so they're hiding that part of the transaction from you. And because of our ignorance, we are only paying as the debtor on that side of the transaction, but we're not receiving as the creditor. So we do not really have a fully functioning double entry bookkeeping system operating, and that needs to be corrected. Now, unfortunately, you did sign an agreement to make payments, all right? And at least on the surface, you have a contract. And the prima facie case is that you need to make those payments. And that's a whole nother discussion. Okay, we won't get into that. Let's just leave it there for now. All right. So the note that you created when you signed the note for the mortgage process, that actually created funds that went on a ledger in an account. All right. So this account, believe it or not, can be liquidated. And this is what we're after in this process, recoup the note. We want to put you in a position as the bona fide creditor, the holder in due course of that note. And you are the holder in due course because you've never received compensation for that. You received a loan, but that's not compensation for the credit that you issued. That's another matter altogether. Okay? So this process involves tax issues, a number of tax issues. Tax forms and your documents will have to be reviewed and understood, perhaps some new documents created. And there are specialists that provide assistance in those areas. I can make reference to, I'll give you a couple of references here just to substantiate some of the things that we're talking about. You could look at Tax Publication 334, which is a tax guide for small businesses. And in here, it identifies the fact that you are looked at as a sole proprietor in this business that you have created. And this business that you've created is you issued credit, and you should be receiving payments. All right? So the IRS looks at that as a business. We can look at 26 U.S.C., it's Title 26 of the U.S. Code, Section 671 to 679, talks about grantors and others who are treated as substantial owners. And there's much more where that came from. We're not going to get into a technical analysis at this point, but I'm just giving you a little bit of what's involved in this process. So it is solid and substantial, based on substantive law and tax policy issued by the IRS. Okay, so there is a process involved. There's paperwork involved. There is a number of technicalities that you will need some guidance on. But in this process, you're coming forward as the owner of that note, and you are claiming your asset. All right, now, when you get that check for the value of the note, there are several things you can do with it. What would you do? What are some of the options available? Well, you could use those proceeds to pay down your mortgage. If you've ever looked at an amortization schedule, you know that about 2/3 of the payments that you make up front are almost all interest. If you paid down the principal with that, you'd eliminate most all of the interest payments on that and really significantly reduce your obligation on the balance of the obligation that you have to make those payments. Okay, so you could pay your home off much, much quicker. You could reinvest that lump sum somewhere where you might be able to get larger gains. Use that income to offset the payments. All right? So now you have an offset for the payments. You're basically paying little to nothing on the payments that you have left. You could use that lump sum to buy a new home without a mortgage. Maybe you're in the foreclosure process and you're sick and tired of it and you're just ready to walk away. All right? Walk away. Give the bank their home, and you go and buy a new place, get set up in some new digs, feel better, have a clean, fresh start, and not have any mortgage to worry about with the lump sum that you have. Okay, so there's different things you can do with that. Now, once you're in this process, you'll have the funds, and you can possibly negotiate a settlement if there is any kind of a foreclosure action. All right, it's possible that the mortgagee would be willing to negotiate with you rather than go through the process of completing the foreclosure, the legalities, the occupation of the property, doing all the transfers, and they got to put it on market in a bad market, try and sell it. Maybe they do, maybe they don't, maybe they don't get their price. You know, it's a big headache, really. So they may be inclined to simply negotiate a settlement on the foreclosure action, and you pay it off, and you're home free. Now, this process takes about more or less 16 weeks. Okay? Generally speaking, about 16 weeks is a general time frame you might expect. Okay? The worst case is, let's say if you are in a foreclosure action and they do not want to negotiate. Again, just use that money and move on. Walk away, don't worry about it. Okay? There's different things you could do to fight the foreclosure. You know, you could put a statement of claim on the property and force them to try and prove ownership. You could make a public notice by publication, put that out that you are in fact the holder in due course. You know, nobody rebuts it, and with no rebuttals, that affidavit stands as truth in commerce. You could do a UCC 11 search, and normally the banks will not have a registered lien under the UCC. Did you know that? The mortgage is recorded with the county recorder, but there is no UCC lien. So, you know, legitimate liens are only under the UCC. All right, so that's an interesting little point. But you know what? The courts are not there to help you. The courts are in conspiracy in this mortgage fraud to steal property from the people. And I'm sorry to say that. I'm very sad to say that. It would be a very rare occasion that you would have a judge that would sympathize with your plight and actually honor the law. Typically, these arguments that people bring up get ignored and they get railroaded. I heard of a case recently where 6,500 homeowners received a tax notice that they now owed a tax that was equal to or greater than the value of the home, and they had until Monday or some ridiculous short time frame to pay that tax or vacate. This is the level of corruption that's going on. Now, what does that case indicate? What it indicates to me is that law and justice doesn't exist, that the country, we all know, the nation's in a state of bankruptcy, has been since 1933. And we've gone beyond the state of bankruptcy, and we are now in a state of liquidation. And this notice to 6,500 homeowners that your taxes have just increased to the value of your home and you need to pay that now or get out. Basically what it is, it's an eviction notice. Go away. We're taking over your home. That's what they're telling people. That's not bankruptcy, that's liquidation. Pack your things, get out, we're taking your home, we need the money to pay our debt to the Chinese. That's what it boils down to. So take it for what it's worth. You know, I don't know how much a battle in court is going to do. You could give it a shot. This option offers you the opportunity to receive the cash as a check in the mail for the value of the note, the credit that you've established, get what's coming to you, claim your assets, take the money, and move on. All right? So, the good news is that there is people are using it, people are successful with it, and this is an option. Join the law club, find out more about it, and we hope to be able to assist you in this and many other areas of importance in our mutual lives as we seek freedom and prosperity wherever we can find it. All right? Thanks for your attention.